Hello guys, we will start our class. Okay. In the previous class, we have seen the various types of economic systems or types of economic systems, and in detail we have studied about the capitalism. Okay, in detail we have studied about the capitalism or market economy. Its alternative name is market economy, and its positives and negatives. Okay, this aspect we have studied in the previous class, right? uh, we will move forward from there. Today we will study the GDP, something about economy, size of economy, the types of economies we have studied, and now we will move forward. We will study something about the national income. Okay, national income, that is also normal terms it is known as GDP. Okay, uh, to be specific, in specific terms it is known as GDP, and generally it is known as national income, right? So today we will study the national income, and along with the national income, that means GDP, there are certain aggregates are there along with the GDP. NDP is there, GNP is there, and NNP is there. We will try and understand the differences among them. And after that, there are two other concepts, that is national income at the market prices and national income at the factor cost. Okay, these two concepts also today we will try and understand. Remember that this is a confusing area. There is a chance that you will get confused. That's why we will go slowly and try to understand the concepts as thoroughly as possible. One more thing we have to remember here is जितना जरूरी है एग्जाम के लिए उतना ही हम पढ़ेंगे. ओके, वी नीड नॉट डू in detail study like a chartered accountant does or a कॉमर्स और इकोनॉमिक्स स्टूडेंट विल डू. ओके, जितना हमको एग्जाम के लिए जरूरी है उतना ही हम समझेंगे यहाँ पर. ओके, राइट. सो वी विल गो फॉरवर्ड and something we will know about national income. Before going into the topic, we have to know about one more thing, or one basic thing we have to study, that is factors of income. Okay, factors of income. I think you might have heard about the factors of income before also, because it is generally taught in very basic, at the very basic level of economics, maybe in 6th class, 7th standard. In these classes, you might have studied about the factors of income. However, we will try and brush our knowledge little bit about these concepts. Okay, so there are 4 factors of income are there. How many factors of income are there? 4 factors of income are there. What are those? The first one is land, very basic one. Okay, land. And the second one is labor. Okay, land is we are talking about economics, right? The industries or industrial activity, to put it properly, production of goods and services is basic for an economy. We have studied it in the before class itself. Production activity is very basic for an economy. In production activity, what happens? We produce goods and we produce services, right? Okay. So for production of goods and services, these 4 factors of economy play an important role, or these are very much essential. Without these 4 factors of economy, we cannot produce goods and services. Okay. So those 4 factors of economy we are studying. First factor is land. First of all, to establish a company and start producing goods and services, land is the first and foremost thing. So we need land for establishing industries. That's why it is one of the factors of economy, right? Second one is labor. Labor means we need workers to work in the industries or in the factories. Then only the goods and services will be produced. Let's say a small industry is also there. Industry in which, or we will say a person is owning his own industry. Okay, whenever he is working in that industry, it is called as a single member industry. In that industry also, that person, when he is working, he is considered as a laborer. So labor is also very basic factor within the economy, right? So this will become the second factor. And the third factor is we require capital. We require capital. Capital means money, investment, other things like buildings, other equipment like machinery, computers, these will also be considered as capital. But first of all, we need money or investment to purchase all these or acquire all these capital, both immovable and movable. Movable capital is something we can move, like machinery, like computers, other infrastructure that is required. And immovable capital is also there, that is buildings, etc. These are considered as immovable capital. So capital is the third important factors of economy. And the last one, fourth one, is entrepreneurship. Entrepreneurship. Okay, what is entrepreneurship? All these, rest of the three factors are there, but we need an entrepreneur. Entrepreneur is a person who has ideas. Ideas for what? Ideas for producing goods and services. That is called as business idea. So a person who has a business idea, he will gather all the rest of the things also, and he will establish his factory, and that person will start producing goods and services. So entrepreneur also becomes an important one of the important factors of economy, right? So this is why all these four things are considered as factors of economy. Together they are called as four factors of economy, and they are very essential for an economy, right? They are essential because without them we cannot imagine an economy, right? That's why they are called as factors of economy, right? So little bit briefly we will go forward, and there are rewards for each and every factor of economy, right? So without any reward or without any return, why entrepreneur will be interested in establishing his factory? There should be some return for him, for the risk he is taking. Entrepreneur here is taking risk by starting the factory, so there should be some return for it. Similarly, each and every factor of economy, it has certain reward, so we will see those rewards also briefly, then we will move forward, right? So what are the rewards? You can pause and tell me if it is possible. For land, what is the reward or return? It is rent, right? So I am an entrepreneur. Let's imagine I am thinking of starting a factory. So first of all, I have to acquire land. So I will go to a person who has land, and I will take that land on rent. So in return, what the person gets, the person from whom I have taken land, the person gets rent. So return for land is rent, or reward for land is rent. Similarly, I will engage some people, some workers to work in my factory. So why they will work? They are expecting some return, or I will promise them some return. What is that return? They get wages. Okay, I will pay wages to them, maybe every day, every week, or for every month. Period may be changing, but I will be paying them wages. In normal parlance or normal language, it is also called as salaries, but proper word that is used in traditional economics, that is wages. So we will use the word wages, right? So for what is the reward for labor? Wage is the reward for labor. And the third one is capital. What is the reward for capital? Capital is, I have an idea, I have acquired land, I have engaged labor, but I need money to purchase other requirements like computers, like machinery. I need a building to establish a factory. So building should be there. For that, I need money. And once building is done, I have to install machinery. Okay. For example, let's imagine I am producing bread. So to produce bread, baking, I have to bake the bread. So for baking, I need certain machinery. So I have to purchase that machinery. For that, I need money. I need capital. So what I will do, I will go to a bank and I will ask the bank to give me loan. So the bank will give me the loan, but what it will expect freely, it cannot give. It won't give freely. So it will expect some return on the loan it is getting. So what the banks will get? They will get interest. Right? So what is the reward for capital? The reward for capital is interest. Okay? And finally, the person who is taking all the risks, the person who has actually idea and who is gathering the rest of the three things, what is the reward for him? There should be a better reward for him. Right? So what is the reward he is getting? He is getting reward in the form of profit. Alright, he is getting reward in the form of profit. So without profit, generally no person will come forward to invest in the business or start a business. Though in the initial period there may not be a profit. Excuse me, just I'm still suffering from cough and cold, so please excuse me for that. I hope I will get soon. I will get well soon. Okay, right. So for entrepreneurship, the person who is taking risk in his business, what is the return for him? The return for him is the profit, right? So he will take profit on his business. Like I was saying, in the initial stage, there may not be a profit, maybe for 4 years, 5 years, 6 years. Uh, the profits will not be, the income will not be that much, right? Maybe after 6 years, 5 years, when the company achieves or the factory achieves economies of scale, when the cost of production will go down, then slowly the company may start making profits. Okay, so you remember, without profit, the entrepreneur will not continue his business for long. After operating for 5 years, 6 years, 7 years, if still that entrepreneur is unable to garner profit, that entrepreneur may close down his company. Okay, that danger is there. Okay, right. So however, these are the 4 factors of income, and these are the rewards for the 4 factors of income. Okay, right. I hope you have understood this much about the factors of income is sufficient or enough. We need not go further, right? So these factors of income are essential because we have to understand later the production at or national income at factor cost, or production at the factor cost. That's why we have to understand the four factors of income, right? Okay, so we will leave this here and we will go forward and we will see how the economy or income of a country is measured. Okay, that is called as national income. So in that 4 aggregates are there in the national income, that is GDP. Okay, GDP is what? GDP is gross domestic product, right? And another one, GNP is also, sorry, NDP is there, second one. What is it? Net domestic product. Later what we have? Gross national product we have. Okay, and the fourth one what we have? NNP, net national products. So together these 4 things we call as aggregates of national income. Okay, national income. Okay, so about each and every one along with their importance and significance, we will try and understand these things. Okay, don't worry, we will understand them very slowly so that there will not be any confusion. एंड जितना हमको जरूरी है एग्जाम के लिए उतना ही हम पढ़ेंगे. ओके, so remember that in UPSC exam the examiner will not ask the fundamental things, basic things. Okay, basics they will not ask in the exam. Maybe in the prelims exam rarely they can ask a question from here. Okay, otherwise they are required for only your knowledge, basic knowledge about the economics, right? Okay, so we will go forward and we will see about generally we will see about GDP. Okay, so nowadays normally for all practical purposes GDP is considered as the national income of a country. Okay, for all practical purposes nowadays it is GDP is considered as the national income of a country. What is the meaning of national income? The income earned by all the people that are there in a country, or as a country, which is, I mean, through the production of goods and services, the income a country is generating. Okay, that is known as national income. With that, if we go forward, the per capita income will also come. We will see that later. How we will get the per capita income. But here we will understand the national income. Okay. So what is GDP? GDP full form is gross domestic product. The definition of it is the goods and services. Whenever I am pronouncing the word production, you remember two things will be there. That is goods will be there, and services will be there. So whenever I am uttering the word production, that will be the production of goods and services. Okay, so GDP is nothing but the production of goods and services, or goods and services are produced. Those goods and services should be final goods and services. Okay, final means there will be intermediary goods which are used further in production of rest of the goods and services. I will explain what is the meaning of final goods and services. Let's say I have taken the example of bread, so we will take this example only. So bread is a final product because we are consuming it. Okay, this is considered as final product. Okay, but how bread is prepared? First of all, there is wheat. A farmer is harvesting wheat, and wheat is converted into flour, atta, flour. Then flour is baked. Flour is then when baked, and it is being converted into bread. So here both flour and wheat, these are intermediaries. Okay, so in the calculation of the GDP, these values of these two have to be omitted. Why? Because their value is already included in the value of the bread. That's why we have to omit the value of price of flour or value of flour and price of or value of wheat. Okay, you understand what is the meaning of final good or final service? Final service is like that. Whenever the service is consumed at the final level, that is known as final value of the service. Okay, so the value of only final goods and services is considered. So it is the value. Okay, and there is time period should be there, right? So within time period should is also there. Within certain period of time these goods and services are produced. Okay, period of time is there. Okay, generally the period for calculating the GDP will be 1 year. So what is the definition of GDP? So in a year, within 1 year, the value of final goods and services produced in a country, that is known as GDP, gross domestic product. Remember, the production of goods and services should happen within the borders of a country. Okay, the production of goods and services should happen within the borders of the country. Then it is known as gross domestic product. Okay, right. So this is the basic definition of GDP, gross domestic product. It is nothing but the within 1 year or generally within a given period of time, the final value of goods and services produced in a country is known as GDP. Okay, right. Right. So GDP, like I told before, it is the fundamental metric to measure the progress or growth of a country. Right? Almost all the countries nowadays are using GDP as the fundamental metric for measuring the performance or growth of the country, except few countries like Bhutan. Instead of using GDP, Bhutan is using gross national happiness. We will understand that why gross national happiness is important and what are the challenges with the GDP. I have already mentioned in the orientation class. So once again we will try and understand it later. Okay, right. Right. Okay, so this is about GDP. Generally, what is included in the GDP, we will try and understand now. Okay, generally what is included in the GDP? There are several methods for calculating the GDP. Those are, I will name the methods which are generally used for calculating the GDP. Those are income method, expenditure method, consumption method, like that. Various methods are there, right? So generally most of the countries are using this method. The method, or generally whatever method the countries are using, generally these things are calculated, or these things are included in the GDP calculation. Those things, or to put it in other words, GDP captures the market value of okay, some things. In that, first thing is, right, consumption. Okay, what is the meaning of C? C is consumption expenditure of people. Consumption of people, or instead of calling it people, we will call it as households. Okay, consumption of households. This is captured. Market value of the consumption of households is captured in the GDP. Second one is second one is I. This is, there are certain businesses. Okay, entrepreneurs. I have taken the name of entrepreneurs. So there are certain businesses or enterprises investing. They are investing in the economy, or they are investing in starting certain businesses or running the businesses. So that is known as investment. The market value of investment is also captured in the GDP. And the third one is households are spending, this is spending expenditure for businesses. And the third one is G, this is government expenditure. Okay, government is also spending money. Government expenditure. Okay, government is also spending money. How it is spending money? It is building infrastructure projects. It is laying roads. It is spending on welfare schemes for the betterment of people. Okay, it is building schools. It is establishing schools. It is paying salaries for the teachers. So all these are expenditure for the government expenditure. So it is also expenditure for the government, and it is also included in the calculation of GDP. Okay, and the last one is, fourth one is X. We have the word X, that is net exports. Okay, that is net exports. Right. Alternatively, instead of X, we can use NX also. Some books are using, so we can use NX. Okay, so this is GDP captures the market value of all the things, because somehow or the other, this is the expenditure done by all the entities that are present in the economy. This is the expenditure done by all the entities, or that is the expenditure done in the economy generally. Okay, why we are calculating GDP like this? We are taking expenditure of each and every entity and we are considering that as the national income of the country, or that is the final value of goods and services produced in our country, because expenditure for a thing or for a person becomes income for another person. Correct? Correct or not? Expenditure for a person becomes income for another person. Let's take this example. I need a mobile phone and I went to a shop to purchase the mobile, right? So I have taken the mobile phone and I paid money to the person, the shopkeeper. So this is an expenditure to me because I have paid money and got the mobile. This is an expenditure. But that money which I paid to the mobile shop owner, it is an income for that person, right? So in an economy, all the expenditure is equal to income. All the expenditure should be or must be equal to the income, right? So measuring income is somewhat difficult in the economy. Measuring income somewhat difficult in the economy because we have to calculate each and every person's income, how much that person is earning, and sometimes it is very difficult to find out all the people that are participating in the economy. For example, in the agriculture sector, a farmer is there. It's very difficult to measure his income, how much yearly that person, that farmer is earning. Okay, so these kind of problems are there. That's why we have tried to simplify the calculation of GDP. So we are considering like this fundamentally this formula is correct. All the incomes should be equal to all the expenditure that is happening in the economy, and relatively measuring expenditure is easy rather than measuring income. So depending on this formula, we are covering all the possible expenditure in the economy. Majorly four aspects are there in the economy from which the expenditure is happening. That is expenditure from the individual households, expenditure by the businesses, expenditure by the government, and after that some export and imports of goods is taking place. We are also considering that. So in this way we are arriving at the GDP of a country. Okay, so in your earlier classes you might have heard this formula. What is the formula? GDP is equal to, or national income is equal to, C plus I plus G plus X. Okay, X instead of X we can also write NX, that is net exports. So we have to understand what is the meaning of export, net exports, because the formula is using net exports. It is including net exports. Net exports are nothing but in the external sector we have both. We are exporting certain goods to other countries, and from other countries we are importing goods. Not only goods, we are exporting some services and we are importing some services also. Services, don't worry about the services. I will give an example about the services, export of services. IT industry is there in our country. Many software engineers are there, or coders are there who are working in coding. So whatever the companies that are Indian companies present here, companies like Wipro, Infosys, IBM, plenty of companies are there. IBM is not our country. Wipro, Infosys, TCS, these companies they are selling their product, IT services, to the foreign countries, especially the clients are there in USA, Europe, all those countries. So those are nothing but export of services, right? You got the difference between export of goods and export of services. Okay. So similarly, we are importing some goods and we are importing certain services. So net export is nothing but the difference between exports and imports. So we are minusing imports from exports. Alright. So this gives us the net exports. It is otherwise it is general that generally our imports are much more than our exports. Our imports are more than our exports. So anyway, we will be getting this figure. Net exports are always in negative. Our net exports are for the most of the time are in negative because our imports are more than our exports, right? So however, we are calculating the we are including the net exports in the calculation of GDP. Okay, so in this way the GDP is calculated. Okay, so these are the things generally the calculation of GDP is capturing, right? I hope you have understood this area, right? So we will move forward and we will understand briefly the importance of GDP. What is the importance of GDP? Briefly, we will try and understand what is the importance of GDP. So, can you tell what is the importance of GDP? Can you tell what is the importance of GDP? Okay, right. First thing is it measures economic growth of a country. It measures economic growth of a country. How it measures? This is simply known as growth rate. Okay, it is known as growth rate. So every now and then you will be hearing the finance minister and other ministers talking about India's growth rate, right? In the budget also there will be mention of growth rate, expected growth rate for this financial year. In the economic survey also there will be mention of growth rate of previous year, growth rate of present year, growth rate of the coming future year, etc. So a growth rate is nothing but compared to the previous year, how much more goods and services we have produced. That is called as growth rate in simple terms. It measures growth rate generally mentions whether we are making progress in production of goods and services or not. Production making progress means what? Let's say in the previous year we have produced, I'm taking just an example, 1,000 rupees worth of goods and services previous year. So as a country altogether we have produced 1,000 rupees worth of goods and services previous year. This year we have produced 1,100 rupees worth of goods and services in our country. Right. So last year GDP is this much and present year's GDP is this much. So there is increase is there or not? Increase is there, and this is told as, or this is considered as growth rate, or growth is there, and we will measure that growth in the growth rate. We will understand that what is the meaning of growth rate. We will percentage निकालते हैं, and based on the percentage, how much percentage more we have produced, that is known as growth rate. Okay. So what is the use of GDP? It is useful for measuring the economic growth of a country. How it is measured? Through the growth rate that is measured. And the second use is it is also useful for comparing the growths of various countries, comparison of economic performance of various countries. I'm frankly telling, except GDP, there are not many avenues available for measuring the economic performance of the countries now. So only GDP is there. Through GDP only we are able to measure or compare the country's economic performance or progress. So it is also useful for measuring or comparing the performance, especially the economic performance of the countries, right? And the third thing the GDP is doing is it is useful for policy formulation. Policy formulation. Okay. So based on the performance of GDP or based on the growth rate only, the country means the government will make policies for the coming period or for the future of the economy. Let's say if the GDP is not performing well or growth rate is slow, the government will take measures to encourage the entrepreneurs to establish more and more industries, produce more goods and services, and it will also encourage the businesses to export more goods to other countries so that we can earn more income like that. So all the policies or majority of the policy is influenced, majority of the policy making is influenced by the performance of GDP. So GDP becomes very important factor in the policy making of the country, right? So these are the few important or few points about the significance of GDP. Okay. Apart from that, plenty of things are there. Now, for the countries after we can say after the Second World War, the GDP has become single most concern for majority of the countries in the world. Every country, each and every country is simply stressing on GDP ko badao, GDP ko badao, increase the GDP, increase the GDP, increase the GDP. Okay, every country is whole and sole motive nowadays is increasing the GDP. That much, that much significance is there for the GDP calculation. Okay, because nowadays it has become the primary indicator for the progress or growth of any country in the world, right? So this is the importance of GDP. That's why we are measuring the GDP, and for all practical purposes, GDP is considered as the national income of a country, and it has become the important indicator for seeing or measuring the growth or progress of the country. Okay. Later we will understand the shortcomings in considering GDP as the whole and sole or the important measure or indicator of growth. What are the problems in that? We will try and understand later in this lecture. Okay, right. So after that, few more aggregates are there. Apart from that, those aggregates are, first one is NDP. Okay, NDP. It is not nothing strange is there. It is the concept of NDP is also similar to GDP. GDP is gross domestic product, and NDP is net domestic product. Net domestic product. So what is the meaning of net domestic product? Okay. So this is something completely related to economics or commerce, right? So we have understood previously that for production of goods and services, we are using four factors. Okay, there are four factors of economy in the production of goods and services. In that, the third thing, that is capital. Okay, capital we have understood in the monetary terms, but by using money we have purchased assets, we have acquired assets, both the movable assets and immovable assets. That is also considered as capital. Right? So in the process of producing goods and services, there will be depreciation. Depreciation is decrease in the value of capital assets. Okay, we will take a basic example and we will try and understand. Let's say a cotton weaving company is there, or we will take simple example. We will not go this much forward. Right? Let's say there is a flour machine is there. Okay, Atta Chakki company is there, which is purchasing wheat, gehu, and it is crushing, or there is a atta machine, chakki machine is there, that is through those grinders the wheat is converted into flour, and the company is selling that flour. Okay, Ashirvad atta, very much famous. So what Ashirvad is doing, it is purchasing the wheat from the farmers, it is using grinders or grinding machines, and it is converting atta into flour, it is converting wheat into flour, and it is packing it and it is selling. Let's say the Ashirvad company has purchased a new grinder, okay, or that chakki, whatever it is called, okay, grinder or chakki. Let's say 10 years have passed, 20 years have passed, still the machinery will be working? No. Maybe after 20 years, 25 years, it will stop functioning. Okay, because gradually its value is declining because the potential years it is going to work, that is that keeps on reducing. So at one point of time it will stop working. So gradually there is reduction in the capital value of this grinder or chakki. Okay, that is known as depreciation. So whatever the capital assets we are utilizing in production of the goods and services, every year their value is declining. Okay, we will take another example. Let's say a company is there. That company uses a car for the manager to move and visit places and come back, etc. Okay, that car is in use for maybe 10 years, 15 years. So after each and every year, after first year, after second year, after third year, the value of that car will be declining. Maybe after three years, let's say, maybe after 3 years, that company wants to sell that car and wants to purchase new car. The car has been maybe purchased for 5 lakh rupees. Okay, if that company after 3 years, if it tries to sell that car how much money it will get? Definitely it will not get 5 lakhs. Okay, it is going to get less than 5 lakhs. Maybe if it is sold after 3 years, maybe 3 lakh rupees that company may get. Okay, so there is decline in the value of that car. Car is nothing but it is a capital asset. Okay, so this reduction of 2 lakhs in the value of car in 3 years, that is known as depreciation. Okay, so simply what we are doing, from the GDP, whatever the reduction in the value of capital assets is there, whatever the depreciation is there, we are taking out that depreciation from the GDP. Okay, so what is net domestic product? Net domestic product is GDP minus depreciation. Okay, so why we are taking out depreciation? Because whatever the reduction of value in the capital assets is there, that is considered as cost. It is also considered as a cost in the production of goods and services. So we have to take out, or we have to take out that whatever the cost or reduction of value is there. In this way, what we are doing, we are adding the that cost also to the production, in the cost of production of goods and services. Okay, so what we are doing, to add that cost to the cost of production from the final GDP, from the final value of GDP, we are simply minusing the depreciation, the value of depreciation. So with that, we will be including the depreciation also in the cost of production of goods and services. Right? So this is something completely related to economics or commerce as a civil servant, or for general studies purpose, for understanding general studies purpose, to understand the economics. This is not that important. Okay. So NDP is nothing but GDP minus depreciation. Okay. I hope you have understood this concept. Apart from that, there are several methods for calculating depreciation, that is straight line method, something, various types of calculation of depreciation are there. We need not go into all those aspects. That is the thing that has to be learned by the CA chartered accountants, or maybe commerce students. We are not required to study that. Maybe accountants, financial majors, they need to study that. Okay, so this is about NDP. So what is happening in NDP? We are minusing the depreciation from the GDP, or we are including the cost of decline of capital assets. So what is the significance of NDP? It is giving more realistic picture of GDP. It is giving more realistic picture of GDP. So that is the significance of NDP, right? Okay. We will move forward. Next, we will study uh, GNP is there, another important component. This is important and we have to understand about it. Okay, GNP. GNP is gross national product. Okay, GNP is not gross national product. So it is also similar to GDP, but here GDP has considered national boundaries. GDP has considered national boundaries. Okay, so in GDP, what we have calculated? We have calculated the total value of or final value of goods and services that are produced within the borders of the country, irrespective of that goods and services are produced by a foreign company or Indian company. We did not differentiate it. Simply, we have considered the final value of goods and services produced in our country, and we have included or we have excluded the imports and we have included the exports. Okay, so net exports we have included. Okay, right. So what GNP does is, instead of taking territory, it will give importance to nationals, in our case Indians. So GNP will calculate the final value of goods and services produced by Indians, irrespective of they are producing in India or outside India. Okay, so many NRIs are there, so they are Indians, but they are present in various countries. They are also earning by producing goods and services. In plenty other ways they are earning. So their incomes are included in GDP, and whoever the foreign nationals present here in India, foreign companies, foreign national, foreign workers, whatever the incomes, their incomes are there, we are removing or reducing their incomes from the GNP calculation. Okay, so it is giving the value of goods and services produced by Indian nationals, irrespective of whether they are present in India or outside India. Okay, right, right. So this is to put it another words, it is the income. It is income instead of value of production of goods and services. We will say this. It is the incomes earned by all the Indian nationals, whether they are present in India or not, irrespective of location of their means of income, that is production of goods and services. Okay, so this is GNP. So instead of territories, what it does, it focuses on nationals, and what it includes? It includes foreign income that is earned by nationals, Indian nationals, in the from outside of the country. Okay, so it includes foreign income earned by Indians who are present in other countries, and it minuses or it takes away the income earned by foreign nationals in our country. The foreign nationals who are earning income in our country, or workers who are earning income in our country, we are reducing that. Okay, it minuses or excludes income of foreign nationals who are working in our country. Okay, so this is gross national product. Okay, simply you remember here the focus is on nationals, wherever, irrespective of wherever they are present within India or outside India, income earned by all the Indians in a financial year, that is known as gross national product. Okay, so the significance of GNP we have to understand. Now there is not much significance for GNP. GDP is the most considered as the most important indicator, but before 1990s, when globalization was not that significant, right? So after globalization, the people moving away from to other countries and earning there, it has kind of become a common phenomenon. So before globalization was predominant, the countries were worried that how much income their nationals are earning. Okay, the countries were worried about how much income they were earning. Okay, so this was holding lot of importance than the goods and services that are being produced in a country. Okay, so it was holding lot of importance. The incomes earned by all the nationals in the country, that was holding lot of importance before that. So that's why before globalization, the GNP concept of GNP was holding lot of importance, right? It was giving, actually it was giving the uh, well-being of an economy or well-being of a country. Okay, so but however after the globalization, after 1990s, people moving to other countries and working and earning incomes, that has become kind of very much common. So now what countries are focusing? The countries are focusing on how much productivity or production activity is happening within their borders, within their domestic borders. That has become very much important, and countries are, that's why, focusing on calculation of GDP. Okay, right. So this is about the importance of GNP and GDP. Okay, after that, final attribute is there, that is NNP, net national product. Okay, so it is nothing but just once again simply removing the depreciation from the uh, calculation, depreciation, value of depreciation from the GNP. Okay, so it is nothing but NNP is nothing but GNP minus depreciation. Okay, so simply this gives the net national product. Okay, this is one way of calculating, but another important way of calculating NNP is there, that we have to understand, that is important. Okay, so another important way of calculating NNP is equal to, we have GNP, sorry, we have NDP. Okay, net domestic product, GDP minus depreciation, that is NDP. Okay, so NDP plus we are including income from the rest of the world. Okay, income, or we can put it like this, net factor income from abroad. Okay, net factor income from abroad. Okay, so what is net factor income from abroad? Net factor from income from abroad means it is the difference between income earned by Indians, income earned by Indian companies, Indian workers, Indian individuals in foreign countries, minus income earned by foreigners or foreign workers in our country, in our boundaries. So this difference will give us the net factor income from abroad, or simply it is known as income from rest of the world. Income from ROW, that is rest of the world. Okay, so for NDP, net domestic product, you are simply adding income from rest of the world, net income from rest of the world, or net factor income from abroad. This will also give the figure of NNP, net national product. Okay, right. So theoretically, this NNP is considered as, NNP is considered as national income. Okay, theoretically this is considered as national income, but for practical purposes, GDP is considered as the national income of a country. Okay, right. So these are the GDP and its other the aggregates in measuring the income of a country. Okay, I hope you have understood them. We have taken sufficient time and we have seen in detail, right? So this much is sufficient for attempting the questions in UPSC exam. Anyway, in the mains, questions are not going to be asked from this area. Maybe in prelims, there may be a chance of asking questions. Okay, but with this information, I hope you can comfortably and sufficiently answer the questions. If at all there will be any questions from the prelims examination. Okay, right. After that, briefly we will see national income. After that, we have understood what is the meaning of national income. Okay, and two concepts are there in the national income. Okay, two concepts are there in the national income. Okay, that is whatever we got by this calculation. The calculation I have shown no. That is C plus I plus G plus X. Okay, whatever the value we have got, that is being called as national income or GDP. Okay, and it is called as GDP at market prices. GDP at market prices. Okay, so whatever the GDP we have calculated, what it is giving, we have seen the definition of GDP, right? What is the definition I gave for GDP? It is the final value of goods and services produced in a country. Okay, final value of goods and services produced in a country. Let's say in a country 1000 or 100 units of goods have been produced in a country. Okay, for our understanding, we will take only goods and we will say that 100 units of goods have been produced in a country, and each unit value of that good produced is 10 rupees. Okay, right. So how much will be the GDP? The GDP will become 1000 rupees. Okay, 10 units of, let's say 10 units of shirts have been produced in the country, and the value of each shirt is 10 rupees. Then what is the GDP of that country? 1000. Okay, what is the GDP of that country? 1000. Okay, so this 1000 rupees is including what? The 1000 rupees including, in the process of production, the government has imposed some taxes. GST at present, the predominant tax is GST, that is indirect tax. It is called as indirect tax. So the government, before these shirts are sold or consumed, purchased by me, let's say I have purchased all these shirts, so I have to, along with the actual price of these shirts, I have to pay GST. Okay, I have to pay GST. If it is something else, there is a sales tax. Before GST, there used to be sales tax, and excise duty is also there. On production of any good or service, excise tax will be imposed. Okay, so government imposes taxes on the goods produced and sold. Okay, but you see here, these taxes are actually not involved in the actual production of goods and services. They have been imposed after the production of goods and services. So they are giving, the taxes are added on later. Okay, so to actually understand how much of actually the cost of producing goods and services, we have to remove this taxes from the value of goods and services. Similarly, there is another aspect, that is subsidies. Okay, so in the process of production of goods and services, the government will also give subsidies to encourage entrepreneurs to take up production activity. Okay, let's say like this. I am an entrepreneur. I want to start an industry, but I am not getting land at reasonable prices. I need land because it is one of the important factors of income. So what the government will do, the government also wants that economic activity take place in its territory. So it will, what it will do, it will give me or allot me a parcel of land at free of cost. It will allot me a parcel of land at free of cost. There I can establish my factory and I can start producing these textiles or shirts. Okay, so what is happening here? Generally, normally seeing, I could have or I had to pay rent to the person I if let's say the government did not give me land. So what I have to do? I have to go to a person. I have to rent land from him, and I have to for that I have to pay rent. But because here the government has allotted me land at free of cost, वो पैसे मेरे पास बच जा रहे हैं. The rent I had to pay to the landowner. So it is a subsidy. The government has given me land on subsidy. Okay. So but in the final value of goods produced, that cost is not captured. Okay, because it is given to me by the government, and I'm not considering it as an expenditure, but it also has to be considered as a cost of production to get actual value of the or actual cost of producing goods and services. So what is happening here? The taxes are imposed or added after the production of goods and services, especially the indirect taxes. Okay, and subsidy, actually they have to be added in the cost of or they have to be added to the cost of production of goods, but they are not being added. So these two factors we have to consider to get to the actual value of goods and services produced in the country. Okay, so what generally whatever the value that we have got through the GDP, that is known as GDP at market prices, because in market prices all the factors are involved here. The government has imposed the taxes, it has given some subsidies, all these are there. Okay, to get to understand the actual cost that went into production of goods and services, or to get into actual value of goods and services that have been produced in the economy, we have to nullify the impact of this indirect taxes and the subsidies. Then we will get value, or then we will get the value of GDP at factor cost, right? So then the actual factor cost, the factor cost, you remember 4 factors of income are there. We have seen them in the beginning of the lecture. Okay, 4 factors of income are there, and further there are rewards, that is actually the cost of production of goods and services, that is rent paid plus wages given to the workers plus interest paid on the capital and the profit taken by the entrepreneur. So these are the actual costs occurred in the production of goods and services. These things will give actual value of the goods and services produced in our country. Okay, so that's why whatever the value we are arriving at after nullifying the impact of taxes, indirect taxes and subsidies given by the government. Okay, then we will arrive at GDP at factor cost. So how we will arrive at here? We will remove the indirect taxes. We will minus the indirect taxes from GDP at market prices, and we will include the subsidies. We will include the subsidies. Then we will remove the indirect, we will exclude, okay, we will eliminate the indirect taxes from the GDP at market prices, and we will include the subsidies to the GDP at market prices. Then we will arrive at GDP at factor cost. Okay, why we have to remove indirect taxes? Because these indirect taxes have been imposed after the production of goods and services. They are not playing any role in the actual production of goods and services. That's why we have to remove it. Okay, subsidies, why we have to include it? Okay, so if government could not have given me the subsidy, I had to actually pay this amount equal to the subsidy on factors of production. Okay, but because government has provided subsidy, that cost has not been borne by me. Okay, so that's why we have to include the subsidies. Then that will give the GDP at factor cost. Okay, this will GDP at factor cost will give the actual value of goods and services produced at factors of factor cost. Factor cost means cost occurred at at the level of four factors, that is land, labor, capital, and entrepreneurship. Okay, so what this will do? It will nullify the impact of indirect taxes and subsidies. Okay, so that is the concept here. That is that is national income is seen at two levels, that is GDP at market prices and the GDP at factor cost. Okay, right. Right. So we will close here. This today we will close here, and tomorrow we will go little bit forward and we will see nominal GDP at nominal market prices and GDP at basic market prices. Okay. So that we will study. It is little bit advanced than this one. Right now, national income, the GDP at basic market prices, that is considered as actual GDP for our country or actual national income for our country. Okay, so there is a concept of nominal prices or GDP at nominal prices and the GDP at basic prices. Tomorrow we will understand that, and after that we will understand GDP, whether it has to be actually considered as a real measure of growth for a country, or what are the challenges in considering GDP as a real measure of growth for a country. Okay, all right. So we will stop here and see you tomorrow. Until then, have a good day.